Good morning, everyone. Optimism is in the air as U.S. stock market futures point upward to start the week. The Dow Jones, S&P 500, and NASDAQ 100 futures are all up, signaling broad investor confidence. This positive momentum is fueled by expectations that the Federal Reserve may soon lower interest rates. Lower rates make borrowing cheaper, encouraging spending and investment across the economy. With Thanksgiving approaching, this hopeful start is a welcome change after last week's market jitters. Investors are focusing on potential good news ahead, both domestically and globally. The market's early rise sets a positive tone for the week. As Wall Street looks forward, optimism is spreading across industries. It's a fresh Monday and the mood is bright. The Federal Reserve is at the center of attention, holding the power to influence the direction of the entire U.S. economy. Every move it makes is closely watched by investors, businesses, and everyday Americans alike, as its decisions ripple through financial markets and impact everything from mortgage rates to the cost of borrowing for small businesses. Right now, everyone is wondering if the Fed will decide to cut interest rates in December, a move that could have far-reaching consequences for both Wall Street and Main Street. The anticipation is building, with financial experts and business leaders debating what the Fed's next step should be. If the Fed does lower rates, it would make loans and credit cards cheaper, encouraging more people to buy homes, invest in businesses, and spend money. This could give the economy a much-needed boost, especially as some sectors have started to show signs of slowing down. According to the CME FedWatch tool, there's now over a 70% chance that a rate cut will happen in December. This tool tracks market expectations and is widely used by traders to gauge the likelihood of Fed moves, so its predictions carry significant weight. The Fed has already cut rates twice this year, signaling its willingness to support the economy in the face of global uncertainty and trade tensions. A third cut would reinforce this stance, showing that the central bank is ready to act if needed. However, not all Fed officials are on the same page. Some believe it's time to act quickly to prevent a slowdown, while others argue for patience, wanting to see more data, especially after recent government disruptions and mixed economic signals. This internal debate adds a layer of uncertainty to the markets, but despite the differing opinions, Wall Street is largely betting that a rate cut is coming. Last Friday, markets surged on hopes that lower rates are on the horizon. This rally highlights just how much influence the Fed's decisions have on investor confidence and market momentum. Even after recent market losses, optimism remains strong. Many investors are holding on to the belief that a rate cut will help reverse negative trends and set the stage for a stronger finish to the year. The Fed's decisions don't just affect stocks, they shape the direction of the entire financial system, influencing everything from bond yields to global currency values. That's why investors, analysts, and policymakers are all watching closely, waiting for the Fed's final call. The outcome could determine not just the mood on Wall Street, but also the financial well-being of millions of Americans. As December approaches, the anticipation is only growing. The decision will set the tone for the end of the year and could influence economic trends well into 2025. All eyes are on the upcoming December meeting, where the stakes are higher than ever and the outcome remains uncertain. The stakes couldn't be higher, and the world is waiting to see what the Federal Reserve will do next. When the Federal Reserve decides to cut interest rates, it's a move that can send ripples throughout the entire economy, affecting everything from your monthly budget to the broader financial markets. But what does this really mean for you, your family, and your community? Essentially, a rate cut means borrowing money becomes less expensive. If you have a credit card balance, a mortgage, or are thinking about buying a car or going back to school, you could see lower interest rates on those loans. This can translate into smaller monthly payments, freeing up cash for other needs or wants. Credit cards, mortgages, car loans, and student loans may all see their rates drop, making it easier for people to manage debt or take on new financial commitments. For first-time homebuyers or families looking to refinance, this can be a real game changer. With lower rates, households might feel more confident making big purchases, like upgrading appliances, buying a new car, or even moving into a new home. This increased spending can help stimulate the economy, as businesses see more demand for their products and services. For businesses, cheaper loans mean it's easier to invest in new equipment, expand operations, or hire more workers. Small businesses, in particular, may find it less risky to take out loans for growth, which can lead to more job opportunities in your local area. As companies grow and hire, more people have jobs and income to spend, creating a positive feedback loop. This cycle of increased employment and spending can help keep the economy moving forward, benefiting communities across the country. Lower interest rates also tend to make stocks more attractive compared to savings accounts or bonds, which often offer lower returns when rates fall. This can push the stock market higher, boosting investment portfolios and retirement accounts for millions of Americans. However, a rate cut isn't always a sign of good news. It can signal that the Fed is worried about a possible slowdown in economic growth, or that there are risks on the horizon that need to be addressed. The central bank's goal is to encourage growth while keeping inflation in check. If rates are too low for too long, prices could rise too quickly, making everyday goods and services more expensive. It's a delicate balancing act, supporting job creation and economic growth, while also making sure that prices remain stable and affordable for everyone. Every move the Fed makes is carefully considered, with the aim of keeping the economy on a steady path. Their decisions impact not just Wall Street, but Main Street as well. For now, the focus remains on promoting growth and maintaining stability, so that both businesses and families can plan for the future with greater confidence. The effects of a rate cut will ripple through your wallet, your job prospects, and the markets, sometimes in ways that aren't immediately obvious. So, keep an eye on your own finances, and remember that changes in interest rates can shape your financial future in more ways than one. On the global stage, the US and Ukraine are deep in negotiations to end the war with Russia. These high-stakes talks are taking place behind closed doors, but their impact could be felt around the world. The atmosphere is tense, yet hopeful, as diplomats from both countries work tirelessly to find common ground and chart a path toward peace. These talks, based on a US peace proposal, are showing new flexibility from both sides. For the first time in months, negotiators are openly considering compromises and alternative solutions, signaling a shift from previous hardline positions. The proposal itself is complex, addressing not only military concerns, but also humanitarian aid, reconstruction, and future security guarantees. The willingness to adapt the plan signals real commitment to finding a lasting solution. Both sides are aware that a rushed or incomplete agreement could unravel quickly, so they are taking the time to address every detail. This careful approach is building trust, step by step, and increasing the chances of a durable peace. The original Thanksgiving deadline for a deal has been relaxed, giving negotiators more time. This extension reflects the complexity of the issues at stake and the desire to avoid mistakes that could have long-term consequences. It also allows for more input from international partners and experts, ensuring that the final agreement is as strong as possible. A rushed agreement could backfire, so careful progress is key. Every clause, every commitment is being scrutinized to prevent misunderstandings or loopholes. The negotiators know that the world is watching, and that the stakes could not be higher for the people of Ukraine and for global security. The world is watching. Peace would be a humanitarian milestone and a major boost for global stability. News outlets across continents are following every development, and millions hope for an end to the suffering and uncertainty. A successful deal would not only save lives, but also inspire hope in other conflict zones. The war has disrupted supply chains and energy markets. Ending it could calm these issues. From rising fuel prices to shortages of essential goods, the conflict's ripple effects have been felt far beyond Eastern Europe. A peace agreement could help stabilize global markets and restore confidence among investors and consumers alike. A deal would create a more stable environment for trade and investment. Businesses could plan for the future with greater certainty, and countries could rebuild economic ties that have been strained or broken by the war. The benefits would extend to workers, families, and communities around the globe. The stakes are high for both peace and the global economy. As negotiations continue, the world waits to see if this historic opportunity will lead to a safer, more prosperous future for all. The Ukraine war has driven up energy prices worldwide. Sanctions on Russian oil and gas cut supply, raising prices at the pump. Now, peace talks could change everything. If sanctions ease, Russian oil may return to the market, increasing supply and lowering prices. Oil prices are already reacting. Brent crude and West Texas Intermediate have dipped slightly. Markets are watching the negotiations closely, and even the possibility of peace is softening prices. But uncertainty remains. Talks could stall, or sanctions could linger. Still, the potential for lower gas prices is real. Geopolitics directly affects what you pay for essentials like gasoline. The outcome of these talks could mean relief for consumers and businesses. It's a clear example of global events hitting home. Let's talk gold, a classic safe haven investment. When investors are nervous, they buy gold. When confident, they shift to riskier assets. Today, gold prices are dipping as optimism grows about a Fed rate cut and peace talks. Investors are moving money from gold to stocks, betting on growth. Yet gold remains historically high, reflecting deeper worries about global debt and lingering geopolitical tensions. Even minor disputes like the current China-Japan spat keep some uncertainty alive. The story of gold is one of cautious optimism. Prices are down on good news, but not collapsing. There's still underlying concern. Gold's resilience shows that while confidence is rising, caution hasn't disappeared. The balance between risk and safety is always shifting. Today the mood is hopeful, but watchful. Let's spotlight Agilent Technologies, a key player in science and healthcare tools. Agilent's earnings report today will reveal much about the health of the life sciences sector. Demand for lab equipment has been sluggish, so investors are eager for signs of recovery. Strong sales would signal renewed investment in research and medicine. Analysts expect $1.59 per share on $1.83 billion in revenue. Agilent recently raised its outlook, so expectations are high. The company's performance is a bellwether for innovation in healthcare and technology. A strong report could boost confidence across the sector. Agilent's results matter for more than just its stock. They reflect the pace of scientific progress. The future of medicine and research is on display. Lenovo, the world's top PC maker, is stockpiling memory chips. Its inventory is 50% above normal. The reason? The AI boom is driving massive demand for high-performance chips, causing shortages and price spikes. Lenovo is buying ahead, betting prices will keep rising. This could make electronics more expensive for consumers, though Lenovo aims to shield buyers from higher costs. Their strategy is a response to the global scramble for AI hardware. Lenovo's latest results show strong PC sales, but squeezed profits due to rising chip costs. The AI revolution is reshaping the tech industry, from supply chains to pricing. Even the biggest players face new challenges and opportunities. The chip race is on, and it's changing everything. Why does all this matter to you? These stories shape the economic environment we all live in, from gas prices to loan rates. The Fed's decisions affect your mortgage and savings. Peace talks can lower your fuel costs. Company news signals where innovation and jobs are headed. Staying informed helps you make smarter financial choices and understand the world's direction. You don't need to be an expert, just knowing the basics empowers you. The forces shaping markets, technology, and global events touch your daily life. Knowledge is power, and it's valuable for everyone, every day.